Welcome back, everyone. Michael with Offshore Citizen, and today we are going to talk about countries that have zero corporate tax. So, 9 countries that have zero corporate tax, and then I'm going to give you a bonus at the end. So, before we get into the actual list, let's emphasize that there are ways that your company could potentially, in some countries, pay zero tax even though it is not in a zero tax country. So the classic example is Hong Kong. A lot of people think of Hong Kong as a zero tax jurisdiction. It is not. However, because of the territorial taxation system, you could pay zero tax. We also have another video. If you subscribe to the channel, you go back and look at our videos, etc. You can go and check out, I think it's the video is something about like hidden zero tax countries or something like that. You can go and check as I go through a variety of countries where you can pay zero tax in your company, that even though the country itself is not zero tax, okay? So you can cover any of those. Definitely subscribe to the channel. We're gonna post lots more about this. Also click the button that gets you to get the notifications. Apparently a good thing. Anyway, here we go. 9 countries. So we're gonna start in the place that is probably best known for zero tax, which is the Caribbean, okay? So a lot of people have heard of, say, Cayman Islands. Yes, Cayman Islands is a zero corporate tax country. We've also got, after it, very similar to it, is Bahamas. Bahamas, zero corporate tax. Now, very few people form companies in Bahamas, in my experience. So, although both local and IBCs can be formed and both are zero tax, in reality, it just isn't that common. There isn't really an established industry for much of anything in terms of kind of global markets for Bahamas. Whereas Cayman Islands has a large financial services industry. They've also done some stuff to appeal to tech, some things to appeal to crypto. There's been some ability to do a little bit of crypto banking down there. So, you know, there is some of that, all right? So, number 1 was Cayman Islands. Number 2, Bahamas. Where do you figure we go from there? We go from there to Richard Branson's home, which is British Virgin Islands, okay? British Virgin Islands, the companies, it's quite famous for, they built kind of their legislation around companies, which has been copied all over the world in a bunch of different places. And we're going to talk about some of those places in just a minute, but zero corporate tax in British Virgin Islands. Again, there's not much going on in British Virgin Islands, so it's funny because it's the number 1 place that for years and years people would form companies. I think there was like 600 and some thousand BVI companies. However, in reality, nobody was actually doing anything there. And what's happened is they've got substance rules that have kind of emerged lately. And the substance rules are, they're making it that if you don't have operations there, you can't take advantage of the tax regime when you're looking at a global tax standpoint. And the truth is that how are you possibly going to have operations in a country where there's a very small population, there's not very good infrastructure, the working culture is not especially great, and you have hurricanes that come through and wipe everything out. So it's great, you know, for vacations, if you're looking for tropical destinations, wonderful. Same thing with Bahamas, but probably not a place that you're going to form a company. Next to it, we've got kind of another place, similar sort of deal, is Anguilla. Okay, so you can go same deal. Anguilla, also zero tax. The model of the laws in Anguilla has typically followed and been based after the British Virgin Islands rules, okay? So that's kind of another place to go. I'm gonna skip over a few that some people will say, hang on, aren't those zero tax? You can have a zero tax company, but it's an IBC normally. So an IBC we talk about in other videos. So the normal, we're just talking about where you form normal companies as residents, okay? So if you hear me skip over a few from here, that's probably why, all right? So for example, you would see a Nevis IBC, you would see something like, there's a variety of different countries in there that have IBCs, okay? So from here we go to Bermuda. So Bermuda is not actually Caribbean, but it kind of feels Caribbean-esque. It's actually in the Atlantic, and Bermuda is famous for their insurance industry. There's a large, well, first of all, the rules were set up kind of to appeal to that industry, and they built a large, what we call captive insurance industry. So for a long period of time, US companies would take advantage of captive insurance. Basically, captive insurance is where you are insuring yourself, okay? So you pay, it generates an expense in your home country and income in the other country, and in that other country, there's no tax, so, you know, this is wonderful. And, you know, you could divert, to this day, the rules for captive insurance allow, under the right circumstances, for US companies to divert a certain portion of their profit over there. Now, then you have to deal with all the other rules to do with controlled foreign companies and things like this, but Bermuda was quite useful for that. And they've built a really robust infrastructure. Now they have a really big reputation and desire to be kind of as white can be, all right? Meaning that it's not a big money laundering center, it's not a big crime center. That was not how they branded themselves. They branded themselves around the insurance business. There's some banking that is possible there for those types of companies, but not a lot if you're outside of that industry. So normally you would have, it's a very expensive place to be. Same thing with Cayman Islands. Like, actually they're quite expensive places to live and to carry a business, but hey, the zero tax and the regime that works for, in the case of Cayman, hedge funds and money management, or in the case of Bermuda, insurance might make it worthwhile, okay? From there, where do we progress to? We progress over to near the UK, all right? So near the UK we have, basically we're gonna talk about 3 different countries, if you wanna call them countries. They're British Crown dependencies. However, there's actually a couple others and I'm gonna mention them as well. So first of all, we have the Isle of Man, all right? So Isle of Man is, basically you've got Bermuda, Isle of Man, and the next couple that we're gonna talk about, all kind of in a similar status in terms of regulation. So it's the type of place where you don't normally form a company and not be there. You would have local directors, local fiduciaries who would form and manage that company for you. This helps them with their reputation globally because they can say they genuinely have management and control there. And usually, first of all, it's a very regulated environment, but it's also an area where they're quite professional, right? The costs are not the cheapest by any stretch, and it's gotten more difficult, as with much of the world, to do business with in terms of banking and things like this. However, Isle of Man has some really good laws and, you know, has made some effort. They tried to be leaders in crypto, but the banks kind of quashed that idea for them, so not so great. We always liked it as a way of accessing the European payment infrastructure without having to actually set up a company in Europe that would be taxable, so that's good. It's part of the EEA. From the perspective of Visa and MasterCard, like the card schemes, you get the same pricing metrics, so that's kind of cool. So you've got Isle of Man, and from the downside of Isle of Man, which we're going to address when we go to the next one, is they are part of the VAT regime. So there is VAT in Isle of Man, and this brings us over to the Channel Islands. So for those of you who aren't familiar, Isle of Man is, if you kind of have UK, you've got Isle of Man is up here, Europe is over here. Well, the Channel Islands are between France and UK. You have Jersey, Guernsey, Alderney, and Sark, and in theory, all of them fit under this criteria, but Alderney and Sark are super tiny and don't really have much of their own identity in terms of forming companies, etc. So what we end up with instead is we end up with Jersey, which is the larger of the two, and Guernsey. They're very, very similar in terms of their corporate rules. It's funny, I once talked to someone from Jersey and I was asking them to compare their rules to the Guernsey rules. This is, I don't know, 7, 8 years ago. And they're like, well, you know, technically they're very similar, but because I'm from Jersey, I'm required to tell you that people from Guernsey are goblins. Anyway, so kind of a little bit of rivalry going on there. These are very similar again to Isle of Man, right? They designed themselves to be very reputable. They don't want to be centers for money laundering. In fact, I would say they're cleaner than Isle of Man. Isle of Man had some scandals with respect to Canada and KPMG. KPMG people were, it's funny because, you know, they trust the big 4 accounting firms, but they got their clients into trouble with the scheme that they were pushing in Isle of Man. It's got some attention. So, for example, the Canada Revenue Agency, the Canadian Tax Authority, specifically looks at structures in Isle of Man as well as 4 other places with respect to paying attention to tax avoidance. Okay, so or tax evasion. So anyway, Jersey, Guernsey, both zero tax, zero corporate tax. Now notice that whereas Bahamas, Bermuda, Cayman Islands, BVI, these were all zero personal tax. Isle of Man, Jersey, and Guernsey are not zero personal tax. They're zero corporate tax. Okay, so again, a little bit different, but Jersey and Guernsey, not a part of the VAT directive, so that's kind of cool if, you know, for whatever reason, and gives a little bit of an advantage if you can make it work for your particular business. In theory, they tried to plug the holes, but, you know, there's still some holes. So from there, we're now up to, if you're keeping track, we're up to 8 countries. So let's recap. We have Cayman Islands, Bermuda, Bahamas, British Virgin Islands, Anguilla, Isle of Man, Jersey, Guernsey, and this brings us to our last zero tax country where you would form, and then we're going to go on to our bonus. And so the last one is, guess, United Arab Emirates. So basically Dubai. Very common place to form companies, pretty easy place to form companies, not impossible to do banking there. You get a residency permit as part of it, very cool. Somewhat expensive, not inexpensive place to form a company, but if you're saving the tax, it might be worth it for you. And so, you know, that's a pretty common place to get set up for a lot of people, especially some people want to live there part of the year. It's kind of hard to go and live. If you think about all these places we've covered so far, the most livable, arguably, I'd argue by far, is UAE. You know, you've got a large city, you know, you've got a few million people there, lots of services, lots of conveniences, and great connections, right? You have basically 3 major airlines. You have Emirates, you have Fly Dubai, and you have, I slipped my mind, Etihad, all within that very close proximity. So it's probably one of the most connected areas in the world by airfare, which is pretty cool. Lots, if you're going kind of from Europe to Asia, you'll stop through there, pass through there, and so, you know, it's a good place for conferences, etc. So that's our last one, and this brings us to our bonus. Now, I mentioned this as a bonus because this has been zero tax for a while, and they recently changed the rules so that it can still be zero tax, but you need to meet the substance requirements, and it's only for certain types of income. Now, technically, you could say, hey, there's actually holding company regimes in a bunch of places, but I wanted to mention this one in particular, which is Labuan. It's part of Malaysia, and provided you're willing to hire enough people there and have enough local business, you can have a zero tax, well, local expenditure is really what it is. So they brought in substance rules, as with much of the world. If you hire a certain number of people, it depends on the industry that you're in, and you have a certain amount of local spending, then you can have your Labuan company be zero tax if the holding company, so not operating companies, but holding companies, or like there's certain, you know, financial services type companies. So anyway, that gives you a little bit of an idea. As I said, there's a bunch of others where you can go and, you know, it's possible that none of these are really the best setup for you, or maybe they are. Reach out to us, send us an email, visit www.offshorecitizen.net or offshorecapitalist.com, or you can book a call with us on Clarity. Happy to talk to you at any time and give you some direction in terms of what might fit for your situation. There is no one size fits all, okay? That's why I always tell people. Anyone who is selling you a specific solution, it's a bad idea. You should look somewhere else and you should find a solution that works based on your individual criteria. That's your goals, that's what it is, what country you're from, that's the nature of your operations, etc., etc. So for example, UAE is not so great for payment processing as compared with, you know, Jersey, right? And so we can kind of go through and consider this. So anyway, you can get zero tax countries or companies in a bunch of places, but these are the actual zero tax, like you don't have a special regime. And so yeah, like the video, share it with your friends, tell me if there's something that I've missed, comment, ask any questions, and I'm gonna see you guys on the next video.